Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Tuesday. It is December the 7th, and as you can see here, we're going to be opening up in about an hour and 44 minutes to be exact. For those of you who like to be specific and exact, boy, oh boy, look at this. Look at this rally, and this is a broad rally. I mean, tech is going crazy. What's going to be interesting is going to be to see whether or not the rally in tech is going to be concentrated in software or in chips. Because if chips rally, we may be moving up for another round, but I think chips are a bit overdone. So I believe this rally is going to be from the software side of tech or the non-chip side of tech for whatever that's worth. The Dow Jones is up 350 points or 347 points, pretty significant. S&P and the Russell, everything is up like there's no tomorrow. Now, I pointed this out yesterday. This was the put-to-call ratio. We hit 114. And if you look back, this is the highest level we've hit since the COVID pandemic period. Look at that. Again, I'm just pointing that out to you. This is the last time we went this high. And that was still the cool-off from the pandemic. Now, yesterday, that was the day before yesterday. Yesterday, we closed at 101. Still above 1, but as you can see here, we're nowhere near here. We're closer to here. So we're still oversold, and I think the market is going to go higher, as evident by today's pre-opening session. Again, keep your eye on how chip stocks weather. And also another thing I'm going to tell you, and this is really, really important, pay attention. This rally, for the most part, is caused because of this, and I'll get into the news segment in a second. Actually, this is probably a good time to get into it right now. But pay attention to what I'm about to tell you. This is important. There's this one sector, and it's called the healthcare sector, XLV. And I'm going to tell you guys something right now. One of the biggest rallies we've seen in the last few days has been of this healthcare sector. Stocks in the healthcare sector have rallied the last few days because of this Omicron. Well, if this Omicron is not going to amount to anything, then the healthcare sector is going to cool back down. So again, keep your eye on that. That's very, very, very important. We may see some downside in the healthcare sector if we see upside potential in other sectors that are showing that this big O, the Omicron, is not as big of a deal as people say it is. And also, while we're here, the big report this week is not going to be international trades in goods and services or productivity costs. This is going to be important. But the big report, the huge report, is going to be consumer price index and consumer sentiment. That's coming out on Friday. Again, just wanted to bring that out to you. So you need to pay attention to the put-to-call ratio. I believe after today, it's going to go back to neutral level. I think the market will bounce back just based on what we're seeing right now, unless something crazy comes out throughout the session, and I'm not expecting it because the news today, the international trades in goods and services and productivity costs, is just not a huge report. It's an important report, but it's not a maker or a breaker like the consumer price index. That's very inflationary right here. This will reflect on the bottleneck that we're seeing across international lines right here. And this will give us a good understanding of how productivity and cost is impacting the bottleneck. But consumer price index is really important because that's going to eat into the GDP report. And same thing with consumer sentiment, which reflects 2/3 on the GDP because that is retail sales, and retail sales makes up 2/3 of the economy. You guys need to understand that. So let's talk a little bit about news. Anxiety about COVID's latest variants is easing. China reported stronger November trade figures than expected. So far, so good. White House medical advisor said Monday that the Omicron variant might be less dangerous. That might allow travel and business restrictions to ease, which is huge, huge, huge. And on that note, also, this is not part of the story, Biden and Putin. Yes, Biden and Putin are meeting today about Ukraine. Very, very important. Is there going to be a war in Ukraine? Russia and Ukraine, boy, they just can't get it together. Airlines, cruise lines, other travel companies stand to gain from avoiding more COVID controls. Advances from Dr. Anthony Fauci, who said indications suggest Omicron might be less dangerous than the early Delta variant. I'm going through this kind of fast because there's just not that much new information here. And again, they say it'll take a few more weeks to find out, but based on the data, the preliminary data we're hearing, it seems to be the case that it's very contagious, but it's not very impactful. It doesn't cause people to die and have serious conditions. Investors are factoring mixed U.S. jobs data and Federal Reserve's plan to accelerate its withdrawal of stimulus to cool inflationary pressure. We'll talk about the bond market in a minute. U.S. government is due to report November consumer inflation on Friday, and that's what I was talking about. This is the price index. That's going to be a really big report, and consumer sentiment. I always wish we had the consumer sentiment early on the week, but the Fed won't give it to us like that. It's just too easy, right? Bond market. I think the bond market is going to crap out today and fall off of the cliff and come back down. Maybe I'm wrong. Maybe I'm right. But look at the upside here we're seeing in price action between the swings. And look at this. The RSI can barely go up. So I think we're going to cool off. I think this was a panic trap. This is kind of what I'm seeing with healthcare stocks that went up on this mild big O fear. And I think we're going to cool off. And I also think VIX, the volatility index, is going to do exactly that as well. As you could see here, it's coming off. We're past being in the 30 level. We're now barely in the 20 level. Once we pass the magic number, which is going to be 20, we're going to cool down, and I think we're going to stay here for quite some time. Now, the bond market. Let's talk about the bond market real quick. As I mentioned earlier, I think we're going to cool off. Let me give you some levels on the bond market. I'm kind of going back and forth today. I think ultimately, we sold bonds right around here on this bar. I think we're going to cool off and we're going to go down all the way to the base. I don't think there's really much going on for the bond market or a big reason for the bond market to rally at this point, because we know the Fed is going to be withdrawing the support for buying bonds. They're going to be taking their foot off of the acceleration pedal sooner than they expected. And that means higher rates and lower bond prices because bonds and interest rates are inverse to each other. So therefore, I think bonds are going to cool off and they're going to revert back to this downtrend we're seeing with the 200-day moving average. The 200-day moving average always gives us the long-term trend. And as you can see here, the long-term trend, while kind of cooling off a little bit, it's still going lower. So very, very cautious. I'm very cautiously optimistic that bonds will go lower because it'll be probably necessary for bonds to go a bit higher. Now, today is Tuesday, and Tuesday I always talk about the hottest sector, hottest stock, weakest sector, weakest stock. But before that, I want to talk about the major indices and just kind of give you an idea of where we are right now. So as you could see here, the S&P 500 has passed the 50-day moving average, just as I thought. We went a little lower, kind of hit the lows right here, kind of filtered out, and now we are trading higher. And I think we're going to start looking forward to hitting all-time highs. The Dow Jones, the Dow Jones, I think it's going to, look at the Dow Jones. The Dow Jones is already above the 50-day moving average, but the Dow Jones hit the 200-day moving average. So this is a very, very bullish indication. A very, very, very bullish indication. I like what I'm seeing here. My biggest concern is the SOX index. And it closed down yesterday. It was above all-time highs, and I'm curious how it's going to do today. Now, the tradable asset is the SMH, and it's up quite a bit. It's up all the way up here. But I'm very curious if it's going to start moving higher because I think the supply chain issues with semiconductors are mostly priced in. We may still be having the bottlenecks, and we still may be having the inflationary pressure, but I think the supply chain, I think we've gotten the price to a point where the supply chain is not going to impact it as much. And by the way, we've been hearing about the supply chain issue now for a long, long time. So I am expecting, notice we've been making lower highs here, lower lows. I think we're going to cool off a little bit on the chips. Maybe I'm wrong, maybe I'm right, but I think the best days for the chips might be behind us. Now, that doesn't mean companies like NVIDIA, I mean, these are leaders. And remember, NVIDIA is more of a cloud company now. NVIDIA, which looks kind of like that, and AMD to rally back up. I wouldn't be surprised to see AMD rally back up, not at all. But be cautious with chip stocks right now. Be very, very, very cautious. Now, I promised, today is Tuesday, I'm a man of my word, and I promised that on Tuesday, I would give you the top sector, the weakest sector, top sector technology, although I think tech and consumer discretionary are going to start taking a little backseat. But the top sector right now is technology. The weakest sector is communication services. What's the number one stock right now in tech? Let me show you. NVIDIA. Let's go to NVIDIA. We're long NVIDIA, by the way, in one of our programs right now. I like NVIDIA. I think NVIDIA will rally no matter what. I don't think it's going higher just because of the supply chain. I think they are just doing amazing business. And I think even if COVID gets worse, a lot of their business is going into making virtual servers and cloud servers. And those tend to pick up during COVID environments. So I think this stock in particular is going to do pretty well. Now, the worst sector, let's go to the worst sector, communication services. Worst stock, Fidelity National Information Services. I think the stock will go up a little bit, and then I would sell the living hell out of this. I think we're going to go down on this Fidelity Information Services. We peaked out back in April, and we've been going down, and I would be selling every rally. So when we get to the 50-day moving average, like to the 115 area, I would probably sell this asset. Now, before I let you go, I've got something important for you, timely, something you need to pay attention to. Folks, the stock market is unpredictable. It can go up, it can get stuck doing nothing for months, and it can crash like there's no tomorrow. But thanks to Chuck Hughes' brilliant blueprint, there's a new tool for navigating the market's uncertainties. Right now, there's no telling what's going to happen next. I'm serious. Things are real. I mean, look at the volatility right now. Because, as we all know, markets can be ugly. I want you guys to click on the link below to learn some of the best ways to position the portfolio in a volatile market and reserve your seat now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market. Be the first to be notified when we post our new video. And remember, tomorrow is Wednesday. I'm going to give you a long trade, a short trade. I'll give you the stop levels. I'll give you the profit targets. And if you behave yourself and send me some nice letters telling me that you're getting value from this at support@marketgeeks.com, I'll even give you the options. Imagine that. Long, short, and options. That's coming Wednesday. Don't miss out. Expect more volatility. Expect a little weakness in some tech stocks, and expect upside in the non-healthcare consumer high dividend yielding stocks. I think markets are overall going to go higher, but be cautious right now with chips. Be a little cautious. It may be time for them to see a little downside, and be careful with healthcare stocks that ran up the last few days as a result of the fear of this O variant. They're going to start receding and coming off down. And remember, learn about Chuck Hughes' new program. It can help you make money in a bull market, choppy market, and a down market. You need to get in on it now. And you'll see me there. I'm part of the program. What's not to like? Bye, guys. Send me some notes. I want to hear if you're getting value out of this. Support@marketgeeks.com. Bye. Have a great day and stay out of trouble, I tell you.